On today's Rebel's Edge, will private payrolls please JPOW as jobs growth finally slow? CrowdStrike crushes the competition with Q1 earnings. And will MLB be must-see TV? What do the boys of summer need to do to get double-digit ratings back? All this and more on today's Rebel's Edge.
There he is. Don't have the clapper, but I got the bang.
But we're all in the same room.
Yeah.
I mean, first time, second time, third
Second time.
maybe.
Second time from Cardone Studios.
Yep.
In Miami.
That's right.
Technically Aventura.
Aventura.
Technically Aventura.
Not bad.
But it's delightful to be here with both these two gentlemen. You guys know Mark Lopresti, and he is, of course, Pete Najarian. I'm John Najarian, and this is the Rebel's Edge, where we bring you Macro Minute, we bring you fantastic futures, some stocks that we're paying attention to, a little bit of sports as well. Shall we start it off?
Let's do it.
Macro Minute ADP jobs report, guys. All right, so it comes in at a 4-month low. So as we've been saying, we're not rooting for bad things for the economy, but things are slowing down. And, you know, even though inflation is still going up, it's not going up as fast, but it's still going up about 3.4, 3.5%. And now, with GDP projected to be 1.8% by the Atlanta Fed yesterday, and this jobs report, this is private payrolls, Mark, but it still ain't good.
No, it's not good. I mean, this is jobs growth, right? And people always get this wrong when we talk about the jobs numbers. They think we're talking about unemployment. No, we're talking about new jobs. And the economy added less new jobs than the market was expecting. So it's still that cuckoo, good news, bad news, bizarro world, 95% of which, by the way, coming from the services sector. So I take from that the consumer continues, except when it comes to sneakers and footwear, consumers continue to spend their money on service, the type of spending, entertainment, experiences, things of that nature. Layoffs at their lowest level since December of 22, which are also found interesting. And the biggest area of contraction in the manufacturing sector, which actually lost about 20,000 jobs relative to the rest. So,
Which ain't good.
Which ain't good. A lot of interesting pieces of information to take out of that.
And what I'm going to say is just a real quick synopsis of it all, which is, hey, look, the data continues to be what it is, and Jay Powell ain't cutting anytime soon.
No.
If September, maybe, but nothing until then.
Yeah.
It's going to be tough, but Jay Powell, you know, this is the bed he's got to sleep in.
Yep.
He made it. He waited as long as he did. All right. What about fantastic futures? Fantastic futures. I'm going to say Bitcoin futures. And we never really discuss fantastic futures ahead of time, folks. So usually Pete will say, I was going to do Bitcoin futures, but back through 70,000. So I'm saying that's my futures today.
I'm just going to touch on the VIX because I don't think we talk about it enough here on Rebels Market Rebellion and Rebels Edge. But I'll tell you what, when you look at the volatility index back into April, you were at somewhere between 13 and 18. I know we did get up above 20 as well. We get into May and suddenly it's 12 to 14. You know where it's continuing to hold as we've gotten now into June? Call it 12 to 14. So volatility is getting depressed right now in the markets. Good time to buy protection, or if you're looking to the upside, maybe put on some calls or some spreads.
Is that just a function of like people starting with the summer vacations? Is it a function of T+1? What do you think is the biggest catalyst bringing the VIX down?
Well, we still had incredible volumes when you look back to May.
Right.
Now we've gotten into June, starting off a little bit rocky right now. Very, very low volume. So to your point, maybe it is that people are just kind of pushing away for right now. Volatility's coming in just a little bit, and some of those volumes coming in as well.
Yeah, sell and may and go away. We don't know that
didn't work. That didn't work. Those idiots who use that, I'm telling you, they just do it because it rhymes. That's it.
It looks good on a T-shirt.
Yeah.
Well, HPE, guys, Hewlett Packard Enterprise, they had earnings after the bell last night. They beat revenue expectations. It's a very nice report out of these guys. The stock up double digits, and we had unusual activity in it. So despite the fact that a lot of people probably weren't betting on Hewlett Packard Enterprise. Some really smart paper was.
Right.
And when we see that and we follow that paper, and by the way, you guys can do the same. You can follow it. You can subscribe, and you can do that at marketrebellion.com/get started. But what surprised you in this report, if anything, Mark?
Well, it's interesting that HP, which is not exactly what you think of as like a startup, innovative AI company, right?
Yeah.
But this is like your father's Oldsmobile of the AI space. But that is the area of their revenue that actually saved their bacon, doubling sequentially according to the earnings report. Because look, cloud revenue was down almost 10%. Intelligent Edge, which is one of their B2B platforms, down 19% on a year-over-year basis. That's not great numbers. That also tells me that Amazon and others that are in the cloud and the hybrid cloud space are probably taking even more market share away from these guys. This was, again, another guidance story, as this earnings season has been all about. We should call it guidance season from now on. So this is interesting to unpack in this one.
Well, I look at it this way. So when you look at this company right now, it's hitting 52-week highs today. It's had a nice big jump to the upside, right? We see that happening. We see all kinds of volume involved as well. You know what the PE is for this company right now? 9.5.
Cheap.
I think this thing's too cheap. And I'm going to point out one other thing. You talked about some of the revenue where it was weak. How about the fact that the server revenue was up 18% year over year? That's where they're making their money. They are a cloud company, becoming a bigger one all the time.
Right.
And I think because of that, that's why people are so enthusiastic about it. And can you imagine saying, hey, we got a cloud company here. We've got all this revenue. We're trading under 10 PE. Are you kidding me? Single digits?
Find me another.
I like this one.
Yeah, I like it too. I wish I owned a bigger stake. I have a very small stake of HPE. But CrowdStrike, I do have some of this, and CRWD. This one is cybersecurity, folks. It's a phrase you hear a lot, and believe me, businesses have to spend everything's a subscription now, right?
Yeah.
They don't sell you something and you walk out and you just own it. No, it's all subscription. So this is reoccurring revenue and so forth. And they beat on earnings expectations. The stock is up double digits, and it's pushing towards a new 52-week high, Pete. Do you like CRWD at this level, or is it getting too pricey?
I do, but when you look at the PE and the priciness, as you just mentioned, that does make you a little bit queasy right now. But this is a stock that took a bit of a hit, and now it's starting to make a little bit of a comeback. It's not quite at the 52-week highs, but it's not all that far away from it either. How about revenue being up 33%? I mean, when you see numbers like that, you just have to say, wow, unbelievable. 3 times normal volume in the first 90 minutes of the day. This thing is something we're seeing a lot of turnover, but I think a lot of that turnover is people coming in to buy that stock.
Yeah, no doubt. The question, of course, is can they keep up that kind of revenue growth? That's always the challenge with these high-flying tech names. There's some interesting foundational stuff, though, happening in the cyberspace. There's a lot of consolidation. There's a lot of product consolidation. When cyber came out, there was a lot of different, sort of piecemeal solutions. I'm going to buy this system from this guy, this system from that vendor. That's changing. Large enterprises are consolidating products. That's driving consolidation in the space in general. You had Cisco buy Splunk, which we loved for a long time. You had Palo Alto announcing that it's going to acquire QRadar. There's other deals that are on the horizon for the cybersecurity space. That tends to drive names in the space higher, either because they're participants on those deals or on the basis of those coattails. I think this thing can go higher even at these levels.
John, fundamentally, free cash flow, $1 billion, cash versus debt, $3 billion. I'd say these guys fundamentally look pretty good.
Yeah, I love it.
Yeah, I love it. It was a great report, and not surprisingly, they're putting up big numbers, and like Pete said, 3 times normal volume.
Yeah.
Then we've got Guidewire. This is also a story about good stuff happening. What do? Well, basically, they help underwriters for insurance with a cloud-based solution for that. And I know it sounds like a medical device, Guidewire, rather than what it is. But they've teamed up with WTW. Apparently, that's one of the things that people are pretty excited about, because maybe they get even more bookings. And my gosh, Mark, when we were discussing this, you were saying, yeah, look at the earnings and how did they possibly double up on the earnings that versus what was expected, that means they had a lot more sales because we already knew the prices they were asking.
Yeah, I mean, they beat 100%, right, versus what the street was looking for. This is a company that's hard to get excited about. I mean, it's B2B for insurance companies, right? It's boring guys selling stuff to even more boring people to help boring stuff happen. But there's anything but boring in the action in this stock. It's up freaking almost $18 today, 16% pop on this name. It's unbelievable. If you had it, take profit. Don't try to chase this thing. They're not going to be able to keep this up. Although we have seen, I don't know, maybe this is part of the catalyst for this, that remarkable inflation in the cost of insurance, auto, home, and all that. We talked about it the last time we were here on this beautiful set. Maybe that's got something to do with these numbers, but I don't know. This is a pretty boring company.
Well, the revenue was up strong, 16%.
Yeah.
So that's something that I think really stands out. How about the fact that a year ago they lost 8 cents? This is a company that, unfortunately for them, they just haven't been consistent enough of making money, earning money, looking at earnings that are positive, not negative. But they did crush it this go around, and it hit 52-week highs, $127 a share. This is a stock that I think you keep an eye on. I don't think you need to chase it. I think you can be very patient with a stock like this one, but it's definitely got my attention right now. If they can do something in this partnership to create something more consistent, this stock could go a lot higher.
Well, now we got to talk about one that I'll be interested in both of your takes because a former Google employee is running this thing. It's called Snowflake. He has been running it for the last 3 months, and he's changed something that used to be known as the data cloud to now the AI data cloud.
Sure.
But instead of really driving this to the upside, right now the stock is plumbed down to the 52-week low, like 128.11 or something like that. It's over $100 off the 52-week high. I'm not putting all of that on Ramaswamy, the CEO, but I am saying that there's a lot of things bad, but guys, would you buy at the 52-week low down here at 128-ish, or would you say, no, this is a don't touch?
I'm going to say yes. I've always liked this company. I've been a follower of this name since they went public in the middle of the pandemic, which was a brave and bold thing to do. It was a very successful IPO. These guys are very, very good at what they do. I don't know why Ramaswamy decided that he had to slap AI on the cloud thing.
Yes, you do.
Yes, you do.
Yes, 2 letters. AI.
But look what happened. The street's calling bullshit on this, right? It's like, come on, dude. Focus on the core business. You got a good business. Snowflake's among their biggest customers are government, military. Their stuff is deeply, deeply embedded in these systems, which means hard to get rid of. That SaaS recurring revenue that the street absolutely loves. This thing looks cheap.
It does look cheap, but here's the problem. When they had their guidance a quarter or two ago, it was awful going forward. Absolutely awful. And then you look at Slootman and you go, why did this guy leave? Why did he just abruptly walk away? Is there something there that we don't know about? I wouldn't touch the stock right now, even at the 52-week lows. I'm going to have to see some options or something that gives me a reason to look back at these guys as a catalyst to say, okay, maybe it's time now to jump in. Otherwise, I don't know. This thing looks like it's circling the drain pretty fast to me.
Wow. I love it when we don't always agree.
We don't have
for better television.
I'm going to wait on this one too. I don't disagree with Mark. It is cheap. Sometimes these are cheap for a reason.
Yeah.
I think all the things that you'd cited in past years, Mark, of us talking about this stock were all valid. But then, like Pete said, all of a sudden you have the departure of a CEO, a replacement, and the best thing the replacement has done so far is put AI in front of the name.
It's pretty impressive.
I mean, .com, that was a thing.
The AI data cloud.
Hey, before we go to sports, I want to point out one quick name that I saw just before we went on air. Continuing the footwear story, Boot Barn. I don't know about you, Pete, one of my favorite stores.
Sure.
There's not too many of them
those
in
boots
Manhattan,
around.
unfortunately, but anytime I get into the burbs, it's a great spot. Stock's up 4% on continued consumer demand for what? For footwear. In this case, it's not sneakers, although I think they do sell them there, but boots and all this Western wear. Fantastic. That
boots on the ground, man.
Well, you know, it's CMA Fest now. So country music.
Heck yeah, man.
Nashville CMA Fest
and
starts right now.
country music has gone like this. And people, they might
Those are the
dress
boot
like,
barn buyers.
The boot barn buyers right there. I'm one of them.
Boot barn, baby. The 3 Bs.
All right, NFL.
All right, so why don't we start off with the 49ers? I was just there last week. I had a great opportunity to be there for one of their OTAs. Already talked about that just a little bit, but Justin Jefferson had that monster contract that we talked about earlier in the week. Now, Christian McCaffrey was not there. He wasn't holding out. He was not there because he's getting married at the end of June. He and his wife are working everything out. But how about this? While he's there and not at the OTAs, they still decided through some negotiations, hey, look, running backs are not a bunch of fossils like everybody likes to think, John. Everybody's like, oh, yeah, you don't want to pay a running back. Yes, you do. And a guy like Christian McCaffrey just got paid. They bumped him up $8 million over the next 2 years. And then the following 2 years, $19 million a year this guy's going to make. So I think that makes a big stand for running backs are not just a somebody out there kind of a group. And everybody says that. You look at the teams that actually have success in the NFL, every one of them's got a good running back. Every single one of them's got a good running back, and nobody wants to pay him anymore. This team knows how to pay the right guys. Christian McCaffrey's a stud.
Well, I think what I'm looking at here, Pete, is Derrick Henry.
Yes.
Not because he just signed a bigger contract or anything like that, but he's playing with the Ravens.
Yes.
Baltimore Ravens, he will be a difference maker on that team. Mm-hmm. And McCaffrey, obviously, huge difference maker when he came to the 49ers from the Panthers 2 years ago. Not quite 2 years ago.
Great trade.
2 seasons ago. Yep. Brilliant trade by Lynch. He is one of the best GMs in all of football.
Yes.
And when he makes a mistake, which he has made, and we've cited it, he's made very few of those.
I was going to say, very, very few.
Yeah.
The only thing I have to add to this story is that the team member unofficial that broke this news yesterday was my daughter, Elsa. So shout out to you,
Elsa,
for sending me that text yesterday
I love her
in the
for
middle
that.
of the meeting, and I shared it immediately with the boys here. But I like the younger of the Gibb brothers, I have nothing to.
No, it's all good. How about Major League Baseball? I know you're a baseball guy. You're a bit of a baseball guy.
He's a minor league baseball guy primarily because he's got a skybox. At the Patriots.
Yes, yep.
That's really cool. I will tell you this. I'm looking at baseball right now, and I think their ratings have a chance to get out of the toilet bowl, which is exactly where they were. Last year, 2023, the ratings for MLB was the lowest it's been since 1968, which is probably about when they started taking a look at some of these numbers. But, I mean, it really is awful. And you just wonder, why are their ratings so bad? And I'm talking about the World Series ratings right now, but why are the ratings bad? Well, because they can't quite get the right teams at the right times against one another. And we've seen that in the NBA as well, where we've seen some of those ratings come down because smaller markets, Minnesota being a smaller market, some of the others being smaller markets. Right now, we are seeing something going on in Major League Baseball that I think if you are the commissioner, you're pretty damn happy about what you're seeing. You've got right now the Yankees and Cleveland, so you're getting the East Coast, right? Those are your top 2 teams out on the East. And then you get on the National League, you got the Philadelphia and you've got the Dodgers. So the Dodgers, I think, if you could get an LA and a New York World Series going,
Forget it.
These guys might be able to at least get back into double digits.
Yeah.
And it's going to be interesting to see if they can do that.
I used to be a Dodgers season ticket holder when I had a place out in LA on the West Coast. Dodger baseball is a religion, just like it is Yankee baseball, here on the East Coast. I wonder, Pete, the pitch clock.
I thought it helped.
I thought it helped too, John. And certainly, look, the one complaint about baseball, and I do love baseball, but it can get a little bit
long,
boring
tedious
at times, a little bit tedious at times. And I thought that pitch clock was going to have a really significant impact.
It did for the ratings during the season. It absolutely helped those ratings. The World Series, you've got to get big market.
Yeah.
Whatever it is. It could be Chicago. It could be New York like we're seeing, or maybe even up in the Boston area. You got to get LA in there. You get the Dodgers with Ohtani, who, by the way, the guy's absolutely a freak show. I mean, you look at his home runs. You look at his batting average. The guy's unreal. And this year he's not pitching because of the elbow. This guy is probably the most electric, exciting player in baseball in a long time.
Just bought our friend Adam Carolla's house in LA.
Yeah,
actually.
he did.
I sent Adam congratulations on
Ballers.
Ballers.
But Pete, you bring up a good point, and I wonder if the other element that the sport's been missing are those rock star players, right? like Ohtani, like a Dela Cruz,
like
the
Judge for
Cincinnati
the
There's a
Yankees.
few.
I mean,
Yeah.
but that brings that Swifty element, right, of people that
Absolutely.
have to watch not just a team, but they become associated with, affiliated with a love for a particular superstar player that has that electricity. And I think the game has lacked that.
It
in the
has.
past few
Although
years.
this year, I think when you have Ohtani here and you brought up Judge, those two alone, I think, can absolutely raise it.
Absolutely.
And one's with the Dodgers, one's with the Yankees. That kind of helps.
Yeah,
Maybe
and
somebody needs to start dating Taylor Swift's sister or something. I don't know. That
Maybe.
needs to work.
maybe or Dua Lipa.
Yeah.
Is she
But
single?
Yes. I don't even know. I know.
I have no idea.
By the way, the Dodgers had an interesting ploy. I noticed it was bring your dog to the game day,
Oh, that's
and
big.
they brought dogs. Virtually, I mean, they hold 50,000
Four-legged ones.
people. They brought 50,000 people in with their dogs.
I love it.
And check it out. We'll post a Twitter post about it. But yeah, it was very funny. And that's one way to extend, the reach of the league as well,
yeah.
to be the only league that's welcoming of pets.
Yeah, we do that at Patriot Stadium. That's one of the best attended games of the year in that minor league with the bring the pups to the park.
Now, do you
So, a lot of fun.
do you feed a hot dog to the dog? I mean, how does that all work?
You can.
That'd be cannibal, wouldn't it?
Yeah.
Thank you for joining us today, folks. We appreciate all of you joining. Remember, Market Rebellion has education. It has coaches. It has subscriptions that you can sign up for. Go to marketrebellion.com/get started for more. And we will be back tomorrow at 1 p.m. Eastern Time.